Hello. We had some big news this week, and that it appears the petrodollar agreement is officially over. And that has led many people to speculate, what does this mean for the world? What does this mean for my country? What does this mean for kind of global trade? So, in this video, we're going to break down what the end of the petrodollar means and how we can sort of prepare and adapt to what's likely to come next. Hey, welcome to the show. This is Molly Elmore. Today we're going to talk about the end of the petrodollar agreement and what that means for all of us. And forgive me, I'm getting over a cold or the flu or something because my voice is a little bit raspy. So I sound a little different than normal. And I've moved into my new office. I still need a desk, and my books are not all here, but I have the fast internet, so I'm very excited to be here. All right, today we're going to talk about the petrodollar agreement and its sort of role in the supply chain and money as we know it. When thinking about the end of the petrodollar agreement, many people, myself included, are also curious how a digital asset like XRP sort of fits into the next version of global payments. So we're going to cover that as well. All right, before we get into what's coming ahead, let's go back in time a little bit. The petrodollar agreement. This was an arrangement that was made between the US and the OPEC nations in the Middle East in the 1970s after the US sort of stopped having a currency that was redeemable in gold. This was sort of officially the world after the gold standard because there was no longer any physical asset that sort of was connected to the US dollar. However, it's not entirely true that the dollar was sort of backed by nothing. It was just backed by something very different, and essentially the faith and credit of the United States. And it ended up almost, you could arguably say that it was backed by oil, in that there was an agreement that all oil would be bought and sold in dollars. And for a very, very long time, the price of oil was very stable. So, arguably, I mean, you could debate this with me if you want, because I don't think it's really a fact, but you could kind of say that the dollar was backed by oil for quite a long time, or it's even kind of pegged to oil. Because if the OPEC nations, who were the predominant exporters of oil, if they only bought and sold in dollars and there was a sort of fixed rate, you kind of had some consistency in that. Now, this was a big deal because it put the dollar, it continued to have the dollar in a very primary role in trade. It also created a different kind of relationship between the OPEC nations and including Saudi Arabia than had existed before, because the Saudis didn't do this for free. There was an arrangement, which was, we will only sell oil in dollars, and in exchange, the U.S. military will provide support and protection. And that included the nations themselves, but it also included oil being shipped around the world in the supply chain. Um, you know, we've never had to worry that like the widgets that we order from China coming to Miami are going to be hijacked by pirates. I mean, that's occasionally happened over the last few decades, but it's very rare. For the most part, the global supply chains have been kept protected. So that's a benefit for all of us. But this sort of, I mean, I'm not going to say that this was all good. That was sort of the deal, though. Now, what was sort of the consequence of that for the dollar was it created constant demand for dollars. I mean, most nations had to import energy, some more than others, which means that most nations needed to have dollars. And the way you get dollars, if you're not a country that can print dollars, which is the US, you would have to sell stuff, sell some sort of asset that your nation has as a resource, or some sort of product that you produce, or some sort of service. You had to figure out some way to make money so that you could exchange your currency for dollars. And this is where exchange rates were a big deal, because, you know, if you had a good exchange rate, then you didn't have to work as hard to get those dollars as a nation with a poor exchange rate. Now, this benefited. Now, when you have constant demand for a currency, it makes its value high. Basic law of supply and demand. The more people that want something, the higher its perceived value. So this means that for these oil exporting nations, the profits that they made were able to be stored in a high value asset. So that was a benefit to them. Now, this agreement has now ended. Now, there's no like big sign somewhere saying this, but the deal was that the OPEC nations would only sell oil in dollars. And this week, Saudi Arabia has officially created an alliance with China that they will be selling oil in another currency, including the Chinese yuan. So that's sort of the end of the deal, is that it was a pretty non-negotiable arrangement, and there have been wars in the past fought over other global leaders who attempted to sell oil in a currency other than dollars. Saddam Hussein and Muammar Gaddafi both attempted to do this and did not end well for them. So this is a big deal. And this is partly, I think, why Saudi Arabia has formed an alliance with the BRICS nations. So they sort of, my understanding is they're going to function a little bit like NATO, in that if you were to attack a BRICS country, then all of the BRICS countries would sort of like stand up for you and fight back. So this is significant in that that agreement, which led to a demand for dollars consistently, has now changed. So the question comes, which is what we're going to talk about in this video, is all right, so the petrodollar's over. So now what? Is like, are terrible things going to happen? Is it going to be no big deal? To be totally honest, like, we don't really know. This has never happened before, right? And lots of people have opinions on it. To prepare for this video, I actually gathered quite a few opinions, and they were a little bit all over the place. So that just told me that we are in a period of uncertainty. So what I'm going to do is go through some of the things that could happen so that you could identify them in advance and prepare for them. My working theory at this point is that a bunch of different things will happen. It's not going to just be like all good or all bad or really dramatic or nothing. It's going to be quite a few things. And that's largely in part because the world is complicated, the global supply chain is complicated, and the number of things that the dollar influences is huge. And the more I tried to sort of just simplify it, the more I realized like this is not a simple topic. Namely, because the dollar is part of our financial system that is a complicated machine. And it's not just about like buying things in dollars. It includes like stock markets, bond markets. Now there's corporate bond markets and government bond markets, sovereign bond markets. Then there is this entire derivatives world, which is very complicated. And then there's real estate. Like, there's a lot going on here. So for anybody to tell you that it's going to be all good or all bad, that's just not how it works in real life. Like, it's going to be messy, and there'll be some good things and some bad things. I personally think that it's going to take a while for a lot of these things to play out, because generally, unless you have some sort of cataclysmic event, which this I don't think is a cataclysmic event, they kind of take a while to unwind and work their way through the system. One thing that is clear, though, is that we are moving towards this multipolar world. And what that is jargon for is that up until now, we've kind of had this one supply chain. Everything was bought in one currency. And now the other nations had currencies, but there was a predominant currency, and it was part of the petrodollar agreement. And this agreement was also made after World War II, the Bretton Woods, that, global trade was going to be done in dollars. And that was confirmed in a different way in the 70s, after the gold standard left. But it doesn't benefit a lot of nations to have that arrangement. It benefits people who benefit from a strong dollar. They love it. The petrodollar agreement was great for the people in finance and those large corporations who received money directly from the government. It was a great deal arrangement for them. But there's a lot of entities that don't like it, which is why I think we're seeing it end. Namely, other countries, especially other superpower countries that can't print dollars. They're like, well, this kind of sucks because we're at an inherent disadvantage. We have to work to get dollars, where the US government can kind of just print them. Like, it's not really fair. And everybody kind of went along with that arrangement until the United States government decided to weaponize the dollar. And that if you make this deal that we want every nation in the world to store their wealth in dollars, that's what the global reserve currency means. And then if you do something we don't like, we're going to seize those assets. That ain't cool. Like, forget about whether you think it was right or wrong for the US to do that. I don't know why any nation who had their assets seized would be like, okay, well, whatever. I mean, that's a big deal. We're not talking about insignificant amounts of money. And earlier this year, the US seized the Afghan uh, assets and the Russian assets that were being stored in dollars. And what I think the wake up call was that if any nation is potentially ever going to be on the wrong side of the US government, and the US government like changes, right? We don't always have the same type of people in power. Like, who knows what the next leader could be? He could even be more insane than the one we have now. Like, you don't know. And so if you now have this arrangement where if you don't go along with the US government for whatever policy they're implementing, your money's going to be taken. That's pretty risky for a nation to hold their wealth in something that is that susceptible to seizure. Therefore, other nations, like those in the BRICS alliance, had made a decision like, you know what, we kind of need a backup plan. And they were preparing for this. They had, because the way the trade works is also complicated. You have these systems set up in place that actually facilitate these payments. And part of it uses a messaging network called Swift and correspondent banking. Like, there's a lot of stuff that's been in place for a very long time that to replicate that is not like a 5-minute thing. But China and Russia and the BRICS nations knew about this, so they've been preparing an alternate payment system for quite some time. Which means that, nothing I think that happens in global trade or global finance, even if it appears to be shocking, it's not. Now, the thing that becomes another debate topic is, well, if the dollar isn't going to be the global reserve currency anymore, and we see China being this sort of new superpower, they're exporting lots of stuff, maybe the Chinese yuan will be the next global reserve currency. Or Russia, who is a huge exporter of energy, maybe the Russian ruble will be the new global reserve currency. The reality is, though, is that, and this is my opinion here, I don't think any nation wants to be the issuer of the sole reserve currency. This is based on what's called the Triffin Dilemma. I've done a video on it. I'll put that in the description. But essentially, the Triffin Dilemma means that the issuer of the global reserve currency gets perks and negative consequences. That the perks are you have a strong currency, which benefits you for buying imported goods. Basically, you have an advantage in an exchange rate where things feel cheap. So if you're in the United States and we have a strong dollar, and you want to go to Europe for vacation, everything feels cheap. You want to buy widgets from China or Vietnam or some other country with a weaker currency, those widgets feel inexpensive. However, there's a massive downside to this, which is that if you are a country that wants to be a producer and export things so that you can be you know, you can bring in more money than you spend, then you have this problem, and that your strong exchange rate means your strong currency makes your stuff unaffordable to people in other countries. Just like Chinese products feel cheap in the United States, the opposite is true, and that American products feel very expensive in China because of this exchange rate. So China, massive exporter, right? Think about how many widgets of all sorts and shapes and sizes China ships around the globe. If Chinese yuan were to be the global reserve currency, all of a sudden the currency would rise in value and lots of people would not be able to afford those things anymore. Same with Russia. If all of a sudden Russian oil cost a lot more money for other countries because the Russian ruble became stronger, then that will end up hurting Russia, and that other countries would be more competitive for energy. So it doesn't really benefit a big exporter to have this status of reserve currency, which is why we have seen a lot of discussion about the BRICS nations issuing a a new payment currency, which potentially a reserve currency. That's a basket of a variety of different commodities, gold, silver, maybe energy, and even some currencies from those nations. The idea, I think, is to remove the burden from any one particular country for, sorry, there's a fly in here. Remove the burden from any one particular country from having to deal with the Triffin Dilemma. All right, so now the question comes, what happens now? In that, will there be hyperinflation? That is a concern that many have had. I actually wrote a thread on it because it kind of makes sense in one logical sense, but I don't think it's going to happen. And I'll explain why. All right, so hyperinflation means that a currency that is suffering from inflation, which the dollar is, all of a sudden the supply like shoots up dramatically, and things that cost like $10 today, you wake up and tomorrow they cost like $5,000. We've seen this type of thing happen in uh, Zimbabwe, in Venezuela, and in Weimar, Germany, back after World War One. It's very unusual. It does not happen very often. And I don't know if it's ever happened with the global reserve currency. And it's generally done, sometimes it's done intentionally to hyperinflate away debt. Because if I owed you $1 billion, right now that seems like a lot of money. Well, if the currency became hyperinflated so that the currency was worth nothing, then all of a sudden the debt goes away. My debt's not worth anything anymore. And there's been hypotheses that, like, and I've discussed this too, that would be one way to solve the national debt problem that we have in the West, right? Like the US, I think the debt's like 31 trillion. Well, one way to get rid of that is to make the dollar worth nothing. And therefore, boom, your debt problem is solved. The reason why that's not terribly realistic is that a lot of very rich, influential people have wealth in dollars. And to hyperinflate is generally like it doesn't happen accidentally. And that there are measures in place that you could, mitigate that likelihood dramatically. So just be aware that if we had a hyperinflation problem, a ton of extremely wealthy people who own dollars and US treasuries, they would become valueless. So all of those people would have to do nothing in that process. The other thing that comes up is this question of like, all right, so all these countries in the world right now, they need dollars. And they need dollars to buy oil. Well, now they don't need dollars anymore. So they've only been holding them for the dollars. So this idea that all these dollars are going to come flooding back to the United States and create hyperinflation kind of sounds logical, but not really. Here's why. That right now, a lot of these countries, they're not like sitting with suitcases of cash, nor do they have just dollars sitting in like a bank account. For the most part, they have these dollars in US bonds. It's considered as good as cash. However, it earns a return. And a lot of times bonds, actually all the time, bonds are bought for a particular finite period of time. You could buy a bond for a couple of months. You could buy a bond for a couple of years. You could buy a bond for many years. They're varying time periods. 10-year bond is pretty common, my understanding, and I'm no expert on bonds. I'm just learning about this world. So what could happen though is that when I go to, let's say I'm another random country and I no longer need dollars anymore, and I have all this wealth in dollars in bonds. When the bond expires, normally in the past, I would have taken that money, I would have just cashed out, and I would have bought another bond. A bond is a loan. So when I buy a bond, I'm actually loaning money to the US government. And in exchange, the government pays me interest as a thank you for it. Now, this loan, the money for it didn't exist until the loan was issued. And because they sort of created this bond, and I can go in and buy it, and when the bond expires, it's sort of like the loan gets paid off and it goes away. This is one of the more confusing sides about the sort of fiat currency credit world, is that money is credit, money's an IOU, and when I when something issues IOUs, they're issuing a loan saying, I owe you stuff. But when the IOU gets paid off, the money goes away. Now, it is a little confusing because sometimes, like the stuff that you bought with the money, you make a purchase with it, and that continues down through the economy. So it can kind of take a while for all of this to work itself out when the initial debt gets canceled. And I've worked this out with people, and it is correct. If I'm not doing a great job explaining it, my apologies. But here's why: the bonds that are going to get kind of cashed out, that money won't come flooding back. It will essentially disappear. It will kind of reduce the money supply, actually. Now, that isn't the case with all the dollars. There probably will be some people who cash out of a bond and then they take some of their money, and they, instead of buying another bond, they would buy like stocks in the US or real estate in the US. And that's sometimes what people mean when they say the money would come flooding home. It wouldn't just show up in some bank account somewhere, it would be used to purchase an asset. And this is why, like, it's kind of complicated because not every country's going to do the same thing. You might have your money in bonds for varying degrees of time, and there's kind of a bunch of options about what a particular country could decide to do with their dollars. Now, the reality, though, too, is that the dollar, even if it's not going to be the only thing used to pay for things like oil, it's still the best currency relative to all the other sovereign currencies. And so people, if you're a third world country and your currency is very volatile because you have a lot of, chaos maybe in your country, you're still better off holding your wealth in dollars than you are in a volatile currency. So many nations are still going to choose to hold dollars simply because it's the best option relative to everything else at this point. Now, you could believe that maybe something like Bitcoin or gold are good. And I bet you a lot of nations, to be honest, would diversify and not necessarily hold their wealth in only one thing. But that doesn't mean that there's really a scenario where it would lead to extreme printing of dollars in hyperinflation. Now, the other question that comes up with XRP specifically is, all right, so now XRP gets used and we see these correspondent banks no longer have to store these trillions of dollars. Will all these trillions of dollars come flooding home? Probably not, because I imagine these banks would invest those in something. Worst case, right now, a lot of banks in the US are parking their money at the Fed and getting pretty decent interest. That is keeping that money out of the supply. So, I'm not a fan of central banks. I don't think that they are our friend. But the US central bank, the Fed, has one product. It is the dollar, and its goal is to protect its product. And right now, it is doing what it can to restore the ability to print new dollars to only itself and members, said commercial banks that are members of the Fed, or at least US commercial banks. This is why crypto is having some problems right now. The euro dollar market in Europe and outside the US, the offshore dollar market's having problems because the Fed no longer is going to allow other entities to print dollars. And unfortunately, if you are a Bank of the Caribbean and you are issuing loans in dollars and you're not a licensed commercial US bank, for all intents and purposes, you are printing new dollars. So there's kind of a concerted effort to manage that. All right, XRP. Let's go back to this sort of multipolar world. So now you have all these different countries. They are trading with each other, and they're not only using the US dollar. Well, what role does XRP have in this? Well, right now, or prior to the end of the petrodollar, there wasn't a whole lot of there wasn't a whole lot of need to exchange currencies at the country to country level. Here's what I mean is that if I am Canada and I am buying oil on the global market, and I am paying in dollars, then I'm going to have a whole bunch of dollars sitting somewhere. And if I simultaneously am selling something to another country in dollars, then I'm just going to keep all of my like sales and purchases kind of in one account. This is a little bit simplified, but I'm I'm just going to keep it all in dollars because why not? That's what all the trade is being done. Well, now we have this situation where we have multipolar world, and you have maybe alliances of nations, the BRICS nations, maybe the Western nations. Let's just say there's 3 alliances for simple purposes. Each alliance now has their own sort of preferred currency that they use within the alliance. But let's say, a BRICS nation wants to trade with Mexico. Well, Mexico isn't in BRICS, so they're not going to have this BRICS reserve currency. They don't really want to get paid in the BRICS reserve currency because they have no use for it. And at the same time, the BRICS nations aren't going to have Mexican pesos. So you have this situation where everybody now wants to hold a different currency. They don't all want to hold dollars. And that's where XRP comes into place. Not because I don't think they're going to be paying each other in XRP, is that they go to something like the exchange that Ripple built, and they very quickly swap whatever currency they just got paid in for the currency that they want to have. Now, I've had some concerns that, Ripple is an American company, and we now have this multipolar world. Not every alliance is going to be wanting to use necessarily an American product. And while XRP is a sort of blockchain that is agnostic to a nation, the Ripple products are actually American, it's an American company. But here's where I am with this is that you don't really need to hold XRP for very long, like a couple minutes, maybe a couple seconds, as quickly as the transaction goes through. So there isn't really a whole lot of risk if I am Russia and I want to go swap Mexican pesos for Russian rubles using their exchange. I don't have to hold, it's not like holding dollars that can be seized. I am doing a transaction that lasts for a couple of seconds. So I think it's a little bit different than holding dollars as a store of wealth. So I think it really opens up this idea that XRP can actually be used to keep things peaceful in this post dollar world where now we have multiple currencies. Not everybody wants to use the same one, which is fine, but we have to have a way to exchange currencies easily and quickly, cost effectively, so that global trade can still continue in a period where we don't just have one country's military like in charge of everything. So is globalism over? This is another interesting question. It kind of feels a little bit like that's the direction that we're going in. I do think that the sort of European nobility, we call them the Davos crowd, they're still advocating for a one world government. They just want to be in charge of it. They don't really want other entities to be in charge. Now, globalism has pros and cons. One pro is that we could get cheap stuff made around the globe because it's sort of a global marketplace, but it created a lot of losers as well. A lot of nations, they may have benefited from factories bringing in electricity and running water into their communities, but many of these workers sort of had to work in these really deplorable uh, conditions, long hours, very little protection for them. So, it's arguable about whether you're better off living peacefully in a village that doesn't have modern amenities or working in slave-like conditions with cool lights. We could debate that all day. I think there's pros and cons. The Cantillon effect is part of the sort of fiat money world in that the closer you are to the money printer, the more money you will make. And that's why a lot of very working class, lower class people, we've seen this wealth divide, and that the richer keep getting rich, the rich keep getting richer, and the poor keep getting poorer, is because this sort of fiat money system, it benefits certain groups disproportionately more than others. And with the globalism leaving and moving this back to a multipolar world, will that change? It could. It might be no more credit-based money. Like that would be the massive change that's very difficult to predict what that would be like. Will we see a return to more asset-backed currencies? That is a great question. I've done quite a few threads and videos on this. I think it's an interesting topic. I'm not going to attempt to convince you that it is a done deal. I think many people would love to return to a gold-backed currency or what we call asset-backed, which means, gold is a type of asset, but there could be other ones. It's complicated to do that. So anyone who's like, yeah, we should just return to the gold standard, just realize like a lot of things would change and it would be very painful in a transition. So for example, there's a lot of middle class people who like their most valuable asset is their house. They worked their whole life to pay off this 30-year mortgage. That's their retirement money that, they worked so long to make all those payments, paid interest payments. If we were to all of a sudden switch to a new currency system, we could very likely experience extreme deflation because the price of assets like houses has been really pumped up because it was very cheap to get mortgages. Made it easy to buy a house. Now, we could argue about whether that was a good or a bad idea, but the reality is that it will still create a big problem for the home market if all of a sudden there's no more loans. You're not going to be able to imagine if you had to sell your house tomorrow and the only people who could buy it, or sort of like the only way it could be bought, was from either cash or someone who had enough gold to buy it. Like, how many people are in that position? It would really mess up the home housing market. The stock market is also very much inflated by this fiat system. And so if you are also somebody who worked your whole life, fed into an IRA, 401k, or you have some kind of pension, if all of a sudden the value of those things went away, then you'd have problems. So that's not a simple thing. And this is where I think this idea, people will talk about Nasara and Jasara. I do lots of research about Nasara and Jasara. I think it's a very interesting concept. Uh, I'm not one of the people that's convinced it's going to happen. I think it could happen. I think there's quite a few indicators that it might, but I also see some problems with it that I'm not clear on how exactly that would work. I also think that it's sometimes people are good at marketing and they can convince you a bad thing is a good thing. And so I don't know if that is the case for Nasara and Jasara, but that I think is one of the reasons why there would likely be something like a universal basic income regardless of whether Nassar Jassar are true or whether we, went through a great reset type thing where all of a sudden this fiat system goes away. So if you are really excited about going back to the gold standard, just be aware that any asset that you have that has value that you're excited about could very likely deflate in value as part of that process. So really adversely affect a lot of people. Now, I think it would be great if we move back to sound money. I think that the fiat system, this is just my personal opinion, the fiat system creates winners and losers. It also has enabled a tremendous amount of corruption in government, in academia, in the medical world, in military, industrial complex, like so much that I don't think any of that corruption would have been possible without fiat money printing. But that doesn't mean that to just walk away from that is a simple thing to do. So that's why I'm unclear about the Nassar Jassar thing, because I don't have enough detail about how all of these consequences would be managed at the scale that it would need to happen. So that's why I can still continue to research it. Um, anyway, wanted to just wrap up this video. So the end of the petrodollar, it could actually mean the return of U.S. manufacturing. I think that is possible. I think it's going to take a while because to just rebuild new industries that moved offshore decades ago is not a simple task. I think it will likely create opportunities for you and people in your community to fill in gaps in the supply chain that may break as globalism kind of moves away. I do think that we will probably see differences in the types of imported products that we get as these exchange rates kind of fluctuate. And this also may lead to a new Plaza Accord type arrangement at some point where the valuation of currencies needs to get reset because they're so out of whack that uh, certain things just don't work in terms of the global supply chain. So, all right, those are my thoughts on the end of the petrodollar and how it affects and impacts XRP, all of you, and me. If you like this video, I appreciate you hitting the thumbs up. Subscribe to the channel to check out the next video, and I will see you in the next one.